In this video, I discuss two massive events that could move the stock market this week. Hello everyone, it's Sajad. I hope you're having a fantastic weekend. So, first of all, US presidential election countdown. We're only days away at the moment. And before we get on to the stock market charts and stock market technical analysis, I want to look at some of the earnings we've had this week and what we have coming up. So firstly, Netflix growth stock rally leaves even more room for disappointment. In this article, they talk about quite lofty stock market valuations. Now, it's funny they talk about Netflix because this could actually apply to most stocks this year anyway. And it's interesting here that it says it leaves growth stocks vulnerable to a sharp valuation correction should investors become disappointed. Now, Netflix fell about 7% on Wednesday. I don't think that's kind of normal for Netflix actually after earnings. So many times we've actually seen that happen when it misses estimates for subscribers and then it kind of picks back up again. And this is a really interesting chart. This shows MSCI world growth versus value and then versus the relative forward earnings estimates. So you can see we're quite flat when it comes to forward earnings estimates. But then have a look at the actual value growth. It's really kicked on from kind of end of 2017, but more than anything actually this year. And you can actually see here, people think, stock market valuations are not important anymore, earnings are not that important, but you can see how closely in general they've been correlated for many years. This is probably the largest gap we've ever seen, suggesting that at some point we need to be wary of a massive correction, especially in growth stocks. The Coca-Cola results were interesting. Some improvement from the low in quarter two. So they saw a 9% decline in quarter three. Compared to quarter two, the decline was actually 28% in revenue. So slightly better, but still it's a decline compared to where they were previously. And we talked in previous videos about the cutting down of staff, but it's interesting to see here Coca-Cola, they have a massive portfolio of brands and they're actually cutting down the number of brands they actually have. So 50% less. That's what they're aiming to do. Phase out some of their products. Now Tesla, despite having some issues with one of the Chinese factories, they are actually on goal for 500,000 deliveries in 2020. And there's talk again about inclusion in the SP500 and quarter three being their best in history. And it's interesting actually that their margins are continuing to improve per car. I mean, how big is this compared to the other companies? Well, you see here very clearly on the chart their projection a lot higher in quarter four than they've ever done previously. Whether they'll hit that goal in the last 3 months, we don't know. I mean, a lot of the other companies, the other auto companies, they're projected to be 14% below pre-COVID estimates. Next week will be the big one though. We've got Apple, Microsoft, Amazon, Google, Facebook all reporting. And if you remember from previous quarters here this year, it is an important event, not only because of the actual earnings report itself, but because of forward guidance. But more importantly for me, when we get on to looking at the charts in terms of technical analysis, what you need to understand, I suppose, with this is uncertainty is never welcome here in the stock market. And once we get past these results, if they're not bad, even if they're not great, once they're behind us, then we kind of start afresh again. So that's going to be key. So after this week, even if we get a move down and the results aren't as good as expected, we should see a refresh. The other thing to mention is all of these companies, they make up a massive component, especially in the SP 500. So that's key to note. So if there is any massive movement in these stocks, it will have an effect on the stock market. The final thing obviously to mention before we get on the chart is, of course, the election will be the other major event that will affect what happens in the stock market. Again, any uncertainty. This is despite the fact that people have been voting right through the last few weeks. You can't really predict at this stage what's going to happen with the stimulus, apart from, it's looking less and less likely now. But also after the election, is there going to be confusion, uncertainty about who's actually won? Is it going to be quite tight and close? Will it linger on for a while? Will the new president make some immediate changes? Again, this all feeds uncertainty. So let's get onto the charts now. And again, if you're enjoying the videos, don't forget to click the like button and subscribe to the channel if you're new. So we're going to get onto the S&P 500. But one thing I wanted you to note first, if you have a look at the NASDAQ, the correction since, well, the beginning of September, very, very similar. And it's the same thing you'd see in the Dow Jones as well. But also you can note the same thing on the major stocks. So for example, Apple is a similar kind of setup. It was a high at the beginning of September, and then since then a lower high. Same for Amazon, a lower high. So this is giving us clues already as to what might be going on here. And what I look at first and foremost, more than anything else, is Elliott wave, just because it gives me an idea of structure. So I use that more than momentum indicators or anything else. Remember, we can't know for sure, predict what's going to happen. However, we could get an idea of a higher probability setup by doing this type of analysis. And you can see very clearly here, we had a move down and then a lower high printed here. Now, again, what's another thing that's interesting to note when analyzing this further, the actual retracement, and you'll see the same thing on some of the major stocks in the US and also some of the other indices. You'll notice that we didn't really get into the 90% area. Why that's important is sometimes when we see corrections, we see flat corrections. So, even though it's a little bit short, that's one thing you have to consider. Is it a flat correction? So what does that mean? Basically what that means is any market asset, it moves up. So that's an impulse. And the corrective part is a few different ways that could actually materialize. One could be a zigzag like this. Another very common one is a flat, where you kind of almost meet the previous high and then move down, but it's still all corrective, meaning once that's complete, we move up again. So how would that look here? Now, if that were to happen, and I'll show you an example in just a minute, this is what it would look like. Basically, what would happen in that scenario is we've had a move down, so a three-wave move down. This is following an impulse up, so a massive rally. We've had a three-wave move down, three-wave up, or some sort of correction up, and then we get a final move down, and then we continue the original trend. So this trend here, it continues at some point. Meaning the move from September all the way up to when it completes, probably sometime in beginning of November, that will all be a correction, just a period of sideways movement, and then we continue the trend. And on the S&P 500 anyway, we'd be looking to attack the kind of 4,000 level, possibly even over 4,000 in the S&P. And that could be a very, very good setup potentially if it materializes that way. So what I would look to see is there a nice channel developing here in this move down? And, is there some sort of kind of flag almost developing? And let me show you an example of that. So if you just look left, which is sometimes one of the best things to do, just to see what price action has done previously, you'll see here on the period a kind of decent example. It depends which way you're counting this kind of corrective move sideways here, but the move from the end of April all the way up to the low on the 14th of May. So that was a move that didn't last very long. It's actually only 2 weeks. But you saw here, it's same. A move down, a move back up almost to the same level, but a lower high. Then another move down just to get lower than here. So in fact, let's have a look at the retracement. Interestingly, very similar, just over the 886. So just around the 90% level. And then we had another move down, and then the correction had completed itself, and then we started moving a lot higher. And we actually had a decent rally, if you remember. So that was a rally from the low here, 14th of May, all the way up to the first week of June. So is that something similar that's setting up here? Now, in terms of the overall structure, what you could say then, and let me just remove the drawings for a second. So what you could say here is that then all of this was corrective. You could call it several different things, the whole correction. It could either have been an X wave completing here or a wave 4 actually. But what we will see then is another kind of impulse higher or corrective move higher towards 4,000. But it's the implications, in my opinion, if that were to happen, then that final move, this is how I think it could play out. And again, we're just talking probabilities here. But if that plays out, what I think could happen in the next couple of weeks is maybe we get some sideways movement, but then we eventually do move further down. Either a quick sharp move down, or it will be a grind down. But at some point that will complete. It may not go below this low. And the reason for that is rather than an ABC pattern, because this does look like a three-wave move up in my opinion. So this move here does look like three, is going to be a more complicated WXY, which kind of doesn't really need to make a new low here necessarily, or it could just be a running flat. But my point is, once that's complete, then after a 2-week period, so sometime probably mid-November, we're going to get some sort of rally. Let's call it the, Christmas Santa rally if you want to. But what's more interesting after that, again, I have no idea what's going to happen, but I just have a feeling this could be on the cards. And this will, again, just kind of trap everybody in, because earnings will be over. Everybody will be looking forward. Maybe perhaps restrictions will be reducing, more good vaccine news, either the same existing president or obviously a new president. So some stability in place because somebody will be in office. So after the confusion, get a good rally, but that could be the end of it. That could be the point where maybe the S&P might be around 4,000, who knows, but that could be the end of the entire bull market rally. And the real pain, the real actual crash only begins then, either around Christmas time or into January. Now, what is the alternative here? Let me just remove the drawings again. And again, I'm just purely looking at structure today for the video. If you have any questions at any point, don't hesitate to comment below. So the other thing that I'm looking at that you actually can't rule out, again, is because of this move here that looked so much like a 5-wave move up, then a running flat, and then another 5-wave move up. It looked like a 3-wave move. Now, if we're correcting up, that must mean there's something else could be going on. So either it's part of a bigger correction. That's my first kind of example that I gave you. Or the other option here is that this was kind of a diagonal 1, and this was a wave 2, and you see that in the Dow Jones actually as well. So this could be, just cross that out. So this could be a wave 2, and we're now going to accelerate into a wave 3. If that's the case, well then, we're just on the brink of, a few bad earnings reports, a bit of bad news, and there could be, blood on the streets, shall we say, because that could be a massive move down. Actually, even if this is an A, B, and a C, it could still be an accelerated move, because usually what you find with C waves is they can be almost like third waves. They can be quite sharp and quite aggressive. So, I wouldn't be surprised to see a quick move all the way back down to the 3,000 area. That's possible as well, and you can't for sure rule that out. The only issue with this is, so far we've had a lot of sideways overlapping movement, which is why I think this is more likely a Y wave currently completing itself. So kind of a complex correction completing. I think that might be more likely, to be honest. But again, there's no way we can know. And remember, we talked about the big company earnings. So companies like Apple, they've not really made a fantastic recovery with this move up. So let's see what happens with the earnings. Obviously, they've launched the new iPhone as well. But again, the price action isn't looking, too exciting here, really. It is possible you could trace a 1-2 here. So if they get really good earnings news, then, we're off and running. So I would just look very, very carefully this week. The election, you can't really control or do anything about it, and it could drag on forever. I think the clues could be in the actual news reports, maybe even the news headlines, because clearly at the moment, as we've seen with some of these other companies here on this chart in particular, the actual numbers and the earnings per share, nobody really cares anymore. They just want somewhere to lump their money. That's what 2020's been mostly about. So as long as Apple's earnings, I would say mainly Apple in my opinion, as long as they're not horrific, because they're such a massive cap stock, I think that would be a very, very good opportunity to actually take a long here. However, in the interim, we may get some more downside first before we move up again. So a very interesting week. Please let me know what you think below. I'm going to try and do some regular updates this week and next week, especially as we've got so much going on. If you would like that, again, just comment below. Otherwise, don't forget to like and comment and show your support, and I'll speak to you all again very soon. Have a great week.